It's been a while since I last did a video that goes through explanatory thoughts in my head. Generally, it's really challenging for me to articulate ideas simply because my brain runs way faster than my tongue. Maybe a lot of you can relate to that. But hey, who doesn't like a challenge? Now that I had my coffee and I have a bit of time to myself, it's only fair that I put myself through this bit of a challenge and be here for you so that you get to see visuals instead of just paragraphs of my analysis. Gold has played very difficult for quite a few days because it hasn't exactly shown clear intent, whether it's shooting upwards and it's going to touch the upper limit of the channel, or is it actually starting to fall and it wants to navigate below the channel control level. It hasn't exactly given us a clear sign as to where it wants to turn. And I'm sure a lot of you would have appreciated the idea that, fundamental news can really only do so much in your favor. How many times have you seen gold run against fundamentals? How many times? All right, so I didn't used to believe the idea that all there is to know is on the chart, but these days I have really learned to not take the fundamental news so seriously. Just because we have weakening economic data, it doesn't necessarily mean the dollar is going to lose its strength exponentially. It just doesn't work like that. So if you're just trading the fundamental news and think in simple terms, thinking it's practically throwing free money at you, well, you're gonna get yourself burned, honey. And as you can see, it's pretty self-evident that every time it kisses either limit of the fair value area, it was a good opportunity for you to enter either a sell here, or a buy, right? Now there's a possibility the price is going to continue traveling in this zigzaggy way, and if it does, you know what to do, right? So you've got to observe the price behavior a little carefully. Even though there's a possibility it's going to bounce about within the limits of the fair value area, you have a look at how price has behaved since the 17th of March. Perhaps 80% of the time was actually spent below the control level of the 15-minute FVA. And it has tested the lower limit of the FVA way more often than it was willing to kiss the upper limit of the FVA. So what that actually means is that there is a higher probability of price falling below the control level and eventually breaches the critical level at 1944.5. And if it does, there is also a high probability of price breaching 1935.5. And that's why I have highlighted here. You can see that these are the two downside critical levels to watch, to keep an eye on, okay? And if price does breach through these critical levels, then you know that price will actually end up going through the bottom half of the 2-hourly channel. So it's going to end up looking, let me get rid of the projection line here because it's not actually depicting what I'm about to say. So if let's say that it does hover around this control level a little, and then it falls towards the lower limit of the FVA, dead cat bounce, and breaches through the two critical levels that I'm talking about here, then there is a very, very high likelihood it's going to reach down, sweep the lower lows, and potentially touches the lower limit of the 2-hourly channel just to fill the, what do we see here? Imbalance here. So this is a clear, we've got a bit of gapping and we have imbalance. So it's demanding. It's sitting here, appearing as though it's demanding a fill. And what we also see here, if you have a trained eye as an ICT student, you can also argue that, well, you know what I see here, this is a liquidity pool here as well. So yeah, we have another liquidity pool here. I'm not sure whether you can see this, but this is another clear liquidity pool. So given the liquidity pool, that's the the sell side liquidity pool, and the imbalance that's been institutionally created here back in mid-March, and the fact that we do have quite a lot of kissing points here at the lower limit of the FVA, and the fact that every time gold attempted to bounce back up, it's actually losing its bullish strength, going up towards the upper limit of the 2-hourly channel. So combining all these behaviors, I am leaning towards the possibility of gold falling all the way towards, well, at least it will go past the control level initially, and then it will potentially rate the 2 critical levels before it dips into the liquidity pool here, and it may even touch the eventual lower limit of the 2-hourly ascending channel. So that's my analysis on how gold may move over the next half a month or so. Granted, there's also the likelihood that gold may actually spend some more time giving us a real P in the A. It may even just disregard anything coming from the high impact news, and it's also possible that it may just spend some time hovering around the control level rather than going anywhere at all. That's also likely to play out. But either way, if you have understood my methodology, which I'm sure a lot of you are smart enough to comprehend, if you thoroughly and correctly understand how to apply my methodology, then even if gold starts to give you a tough time traveling within a tight range, it's no problem. We have no fear, because what do? Well, just like what you're seeing here, you can always identify an FVA and just make sure that you keep observing the behavior and make sure that it's well and truly an FVA rather than a distorted, imbalanced FVA. Because an imbalanced FVA, let's say that 90% of the time price actually does not go above the FVA control level, then there is a likelihood that you're just risking yourself by entering a buy instead of a sell. And given the fact that price is still sitting in the upper half of the 2-hourly channel, so you're better off selling, just enter a very, very small position. You're better off selling somewhere here or here even, and then hold that as a swing position. So for example, you may go for something like this, and that is your almost, wait, hold on a second. So let's say that the price kisses almost the upper limit of the FVA, and we see rejections that happen very rapidly, and then we enter a sell straight away. And sorry, that was my dog. And then you aim for a 3.93 R. Looks pretty cool, right? So this is how you may play it, and if it does reach down to the bottom limit of the 2-hourly channel, what do? Well, you don't just go into a buy and hold it for potentially a month and a half in haste. You don't necessarily do that. You need to continue to observe the price behavior, because it can very well be that it's going to dip lower and lower and lower, and does not actually form an excess zone like it did in early March. But if it does reject the lower limit of the wider channel and it returns very sharply, much like what it did on the 10th of March, then yeah, you can obviously enter a buy here, and that would definitely be a superb trade for you to enter, because just look at the risk to reward ratio, right? It's how sexy is that? So that's my analysis for gold, and I hope you enjoyed that breakdown.